Hey everybody, DayTraderRockStar here, and today we're going to go over a video here, which is actually today's market, but it's also a great video because it really um, outlines and goes over what we do here at Day Trading Radio. And the object today, and I really stressed it a lot today as we got back into the market in the beginning of the year here, is understanding what are the setups in the market that move or give us the best returns on our trade. And basically, we're looking at trade zones. So what I like to do here at Day Trading Radio is we have a certain amount of setups we pay attention to. We identify those, mark them for you, and that's part of the broadcast. Now, these setups here, they could be traded across multiple trading vehicles. So we use this to trade our stocks. We trade the futures. We trade the options using these same setups and same indicators. So today I'm just going to review today's action, and because it is very important to understand this, and this is what I stress every single day here, is that the methodology is sound. It is a great methodology. It's the patience and it's a trader's lack of discipline that will cause a trader to fail. There's no doubt, and again, I've been doing this for 20 years, over 20 years, but, broadcasting these setups here live in the market, 10 years, you're very familiar, especially if you follow the show each and every day, that we point out divergences in this market. And when I do point them out, we could actually see the biggest moves in the market play out. We'll also point out what we call high probability setups or high probability playbook plays, which are a set of indicators lining up, and it's also another what we call a trade zone. So let's start off here just taking out a typical day. And again, my main concern, and this is so good because I was so excited today talking about this, because it's great when you're able to see it, identify it, and show the results from it. The market could be chopping around, but unless you are able to really say, all right, this is where you need to be in. Why? Let me point the reasons out here, and then let's see if it works. And you'll see it work each and every time. The bigger moves happen at these levels and when the criteria is met for these setups. And if you can have that patience, you don't have to worry about missing them, because that's what my job is here as a Day Trading Radio, is to find these and add those to the high probability watch list, which is for the members. But during the day, also on the futures charts, these are great setups for the futures traders. Now, Paul's been doing good. He's been trading the futures every single day here and taking a lot of these setups, and he's been doing good. And he trades one or two contracts, mainly one, but he's averaging, $200 to $300 a day just trading the futures. And we have many other traders in the room here doing the same thing. But let's go over some of these setups here. That's just kind of, again, a review. Drive home how important it is to wait for these setups and to kind of explain these setups a little bit more in detail. This is Tuesday, January 17th. We start off the morning, and again, I typically start looking at these setups to start playing out after 3 o'clock in the morning. 3 o'clock zone is when the European markets open up, and we actually start to see a market start to move around a bit more aggressively, and we start to see these indicators play out. Now, as we get closer to that 7 o'clock, 8 o'clock area, then things start to line up. So if you get into the office here pretty soon, or pretty early, it's pretty soon, you want to start paying attention for these type of setups in the morning. Now, you can see at 6:30 today was a classic example. This is one of our textbook examples of a buy divergence, and that was it's right here. It's easy. And when you have a buy divergence, they have plenty of material on, identifying the divergence. What is the divergence and stuff? And I'm not going to go into that right now. But when I identify one and we mark it off in the chart, you see this real time. You want to actually take that position. Now you take it either trading the futures or trading, the SPY, the underlying, SPY shares, or the SPY calls or the SPX ETFs, anything that tracks this. And again, this works on the ES, Dow, NASDAQ, Russell. Same setups across it. We're using the ES as an example, though. So when you do, have a criteria set up and everything lines up properly and you take your trade, all you want to do is actually put that stop underneath the lowest candle of that pattern. Now, a divergence pattern is is two setups. We're actually composed of two things: a low and a lower low, a low and a higher low. So the lower low, that second low, is where you put that, and when you see that divergence play out with that higher low, that candle becomes your stop area. So a little tick below that candle right there would represent your stop order. Now, different ways we can measure our exit scenario. Again, it has to be underneath that. I wouldn't make it a equal bottom. I would make it underneath, about a tick underneath it. Our first exit would be on a fast rotation of that stochastic. Now, this really depends on what the 5-minute time frame is doing also. In this case, we're probably at 6:30. Let's take a look at the 6:30 time frame on the futures. We're going to go to the 5-minute time frame, but look at 6:30. Most likely you're going to see that the stochastics were oversold and probably heading up. So right here you can see 6:30. We're starting to ramp up on the stochastics. That's a very bullish move here. So you actually have a 5-minute divergence too at 6:40. So there's actually a great 5-minute divergence right here. You have the low and the higher low and the reversal candle. So that's also a very key thing that we pay attention to. It's a dual time frame divergence. Happens on multiple time frames. Probably happened on the 3-minute also. So when you have that, then you have a reason to expect that 5-minute to rotate higher. And with that 5-minute rotation on your side, that gives you a better profit to the upside. So again, looking back at that 5-minute time frame, it actually got up to about 2264 here before it got overbought. Now it stayed embedded and continued to move higher, and you will have that situation, and that's fine. This is works great when you have multiple contracts. You could scale out on your rotation, your multiple time frames that you play out with, and then you could actually just follow it up with a trailing stop also. So the different ways you approach that, but there is a standard that we like to pay attention to. Normally you don't get that big move unless you have that, maybe a little news behind it. It was a nice little rock and roll move here on Tuesday, pre-market. So the market opened up then, and right at 9:30, 10 o'clock, we identified another divergence. Now this is what we call a double bottom divergence, a tag of the recent lows, 9:30 lows, but again a higher low on stochastics. And from that point on, we pointed that out, and from that point on, a big rip higher. And then we actually identified what we call a triple stochastic flag setup. And from that point on, we had a little bounce, and then this blue line represents a blue square represents a tradeometer sell signal. And these are the only ones we're really caring about. So we're caring about the divergences. The triple stochastic flag setup is a playbook play. And we can have other playbook plays happening also. And then the tradeometer and the rambot. So these four things here we want to really pay attention to in our trades. Now the market here kind of came into an area where we came into a pennant formation, and we actually had a couple sell signals. We had a 5-minute rambot and a tradeometer. When we have them both next to each other, I tend to call this kind of a super signal. And that, that gave us a nice drop here. Now, I don't know if there was some news that came out. There was something that kind of just got the market to break down here. And not a bad breakdown at all. We kind of flushed down here, came down to a measured move of this channel, and it didn't give much of a bounce. We kind of continued to push down. We had a couple rambot signals here, and we had a nice bounce and the pullback. And this is kind of another interesting setup here, because we had this little wedge pattern and a 5-minute rambot. And a 5-minute rambot does help us find those divergences. You can see there's a slight divergence here. Not a divergence that I would expect a novice to recognize or have confidence in it, but this, because it had, we're at the recent low, we had a small little wedge pattern, and we had a 5-minute rambot signal. These are important. You actually could see it slightly here. You can see it on this one. And from that point on, we actually had that nice move up into the close. And then right now, we're waiting for the market to reopen after hours. And this is, again, what we're going to do tomorrow. Now, I want to also talk about a couple stocks and kind of give you a gift here. Like I said, my job is to find the HPS setups and stocks and then futures and then post those. And we have a special section on the site called the high probability setups, and this is where we post those. our latest divergences, and I said if it's going to end up on the HPS watch list, it's going to be only the best of the best. And that's important because a lot of people who are subscribed to Day Trading Radio don't trade full time. They wait for that watch list to come out. And that watch list is automated. Yeah, it's an automated watch list. The setups here. Let's see if I can bring this down here for us. I'm going to show some of them because most of these are hit already. We have a few that are still active. The setups here are put into this platform, and if they say they're watching, that means the triggers haven't been hit, and the triggers. And again, we'll take a look at a couple that already triggered and the trade has already passed, so we've already gotten out of this. But just to give you an example, this is because we have one that's very similar to this, and I'll show you this one next as a bonus. Here is, I'm just trying to get everything lined up here properly. There we go. Here is the coffee ETF, and this was also a divergence setup. And again, as you can see, a beautiful move on this, off of this divergence. Now we have a great divergence lining up here on this new one. That's on the list. See if I could bring this back up here. Here we have the NIB here with the cocoa trade. Now this is really good. This is one of my favorites. It's a really nice divergence. Kind of pulled back a little, but we held on to this. We actually took that entry down here because it actually made a nice divergence. This candle actually triggered the divergence, and now we reset this. We used the 2650 as the stop. No doubt we're expecting a nice move up here to profit zone 2970.31. Let me just take a fast look at the other chart on here because it gives you a better look at it. I just want to show it to you fast, give you a better view of what we're looking at. And you can see that cross. You see that little circle down here? That nice cross back up. And this candle here took out that low. So we have a higher low. And again, that's all you're going to find here are these perfect setups. You know, you're going to watch this rip higher. I've been banging the table, and a lot of us at Day Trading Radio are in this one. And I got some other good ones right now. I have to just run out of here. I want to put this on pause, and I'll be right back. All right, so went over the NIB. Back in the office. I want to continue on with this special video. And again, the main gist of this video is the importance of just seeing these great setups. And even if you bring up any chart, we're going to start doing this here at Day Trading Radio. Actually, if I have a little time later tonight, I'll try to pull it out. I'm going to try to set it up. It's kind of a not a contest, but kind of a game that we're going to play with stocks. And we could take any stock, we could go back and actually measure out these divergences, and from that point, it's very easy to backtest these, visually backtest them. So, lots of times we do that. If the stock performs well with that type of divergence, you keep it in your watch list and you rotate through it, and eventually something's going to set up again. And if you have enough quality names and you know what you're looking for, eventually there's enough of that type of rotation. At one point, we get the coffee set up, then the cocoa set up, and then maybe we have a divergence setting up in whatever. It could be drugs, it could be healthcare, it could be metals, But this typically happens. Actually, they tend to group up. When you see a divergence in one stock, there's lots of times there's divergences in other stocks in the same sector, pure plays. And that's just a great technique to use, just to wait for something to come around. So I just talked to Rob. I turned on the mic on his side for a second. I know he went out. I'm going to turn it on in a second. But just want to get through a couple stocks here, and then we're going to send this video out. The IFF, well, let's talk about I don't even know what I talked about earlier. Did we talk about the, I guess we talked, I don't even know. Colgate, did we talk about that? Such a long time ago. I think we just talked about the markets. We didn't talk about the Colgate. Going back, checking right now. No. So Colgate, definitely the best bet going into tomorrow. Big candle, good volume. The key here is how we turn back up momentum just starting here. Whenever you have a downward channel and a series of lower lows and lower highs, those lower lows and lower highs tend to time with the stochastic rotation. So if you get oversold, and again, this is probably not the best example of it because not too many lower lows here. But as you continue to make those lower lows, you should make lower lows on the price. But in this case, you're actually making that lower low, and and we're holding off the recent lows and on support, and this now starting to turn back up, has a lot of momentum. This is the first time we've ever actually seen the stock that's pushed up against a trend line. Typically, if we get up against that trend line, we're either overbought or heading back down. In this case, we're just entering that trend line, and we're in kind of a very bullish phase. So this actually looks great to continue to push higher. So no doubt, and I like that. We have a $68 target on this. Great setup, absolutely great. Good momentum play. I'm just thinking about everything else, and off the 200 period moving average off of that. A lot of things attracting this one higher. So we got that out of the way because that was definitely one of the best bets. And of course, the other ones that we're in right now, the Nielsen and LSN, there's nothing really changing. I wanted to get a video out today because we wanted to see how the market kind of closed. But we know going into this inauguration, we're probably going to just see sideways chop into Friday. But there is some great setups here. We're starting to see the momentum. So, this is a big a test here. Now, if this things hold on and go sideways, we have the big question: is this a sell the news event? And if it is, does a lot of stocks react to it? Either way, it still looks good. Nielsen looks good. The IFF started to rip this morning. Started getting a little upside. The positive here, that divergence is working out. We're making a series of higher highs and higher lows, even on a very micro scale like this. Love to get a big pop and sell off, sell into it. But I have the February calls going out a little bit longer, and I think we give this thing a little bit more time. I think we're okay on this. But it is slowly grinding. And then the VFC, well, we did that one already, right? This one's off the lower trend line. We thought there might be divergence. There is the possibility of a divergence still happening here. You can actually see it hold that red line. But I like the combination here. We also have a kind of a wedge pattern in this. So there's a lot of things that I like here for a move up. Hopefully we get that tomorrow too. And the VFC. So all these here in play for tomorrow. The Joe, the CL, the drug stocks are interesting. They're kind of gun shy. The AbbVie here got hit with the Trump comments. Seeing if it climbs back up. It should start to climb back up. Like the Amgen, AMGN. That's pulled back a little. And not that exciting right now. But the new one. This is the new one. This is what everyone's waiting for. What's the new setup here? I want to turn on Rob's mic now, just in case he's out there. He wants to chime in. But you know what I saw too? I saw Kramer mention in PSA today. He was mentioning that on Fast Money or Mad Money. So I'm wondering if and I was talking about it too. I think this is a great buy right here. PSA. I like it a lot right now. So yeah, this looks pretty good. The PSA. No, that's still setting up. Everything here pretty good, but all right, let's go for the new one, the new HPS setup for tomorrow. And it's very similar to the VFC, right? The VFC, which I added to today. The PVH is another apparel manufacturer, and they make clothing brands and stuff. And that's a very clean and big reversal here on volume. This low, effectively, this candle dropped off here, effectively took out the recent low, this little consolidation low, definitely took it out. And when we make new lows and we hold a higher off of those higher lows, and this is a very aggressive move where we reversed quickly and then went higher. This feels this is just one of those extreme cases where you see a big divergence, and extreme cases are usually extreme for a reason. There's usually a good reversal that's about to take place here. So this whole thing does look like a reversal. It should get some follow through, and if we can follow through on these, and maybe we even get some coverage on this, then hopefully they jump. The VFC also kind of in that same zone. And this, like I said, like this one a little bit better because the multiple indicators. But these are the stocks we want to get alerted to. That's why you're being alerted to them today. And we're not going to waste. I'm not going to waste your time with anything else. I did get another one here just to throw it out there. LEN, Lenore Home Builder. I have it written down. Why do I have it written down? Let's take a look. I don't know why. Pass on it. I have it written down for some reason, but I want to pass on it. So that's it. That's the setup for tomorrow, and the reason why you just have to have patience to wait for these things. They're all going to work out. I even think this VFC is going to work out good, which we're going to be watching tomorrow. The Colgate, we got that one already, wrapped up. Oh, and let's talk about Google. Last one we're going to talk about is Google. Great company. It just, the market's just not making its move yet, so you can't get too frustrated on this. But of course, look at how strong this stock is. One of the stronger stocks. Any stock holding above the 20-period moving average, 50-period moving average, and the 200-period moving average, and this very, organized ramp up here. They're not even testing each other. They're not crossing. It's just very strong. The one thing you could say is, yeah, we're extended on the weekly, we're extended on the daily, we're extended on the hourly, but how long is he expecting this to pull back? Writing's on the wall on this. This is going higher. It's not going to pull back too much. Same thing with a lot of these other stocks. But all you have to do is wait for the setups. All right, that's what we're going to have to do. Here's another great example of a Google divergence back in September. Very clean one. And that really started the big move, the breakout move. And then it's pulled back, and then boom. What do you see here? Another big divergence here. And these divergences are showing up more on that 9.93 here. But one that we like, this one I would qualify and say, hey, this is a textbook divergence where we have that higher low above that 20 line and the lower low. And then from that point on, it was just like, and this was actually almost a retracement trend line. So this was even more intense. And I think we took this trade. If you go back, it was a while ago, but I think we got into something back here. It might have been on this X marks this spot, retracement trend line, divergence. This is a killer move right there from 740 to 804. And it's all, explained. How do you get that big move? Well, wait for it. This wasn't a divergence, but it's simple as that. Might not show up tomorrow, might not show up next week, but they will come down the path. And because we look at everything, because our sectors are, so diverse, and some stocks might be in a bullish phase, some stocks are in a bearish phase, we'll eventually run into these, and we run into them every week usually. So keep reminding yourself to wait for your best pitch. Over trading will get you eventually.
Johnny, look at the J.P. Morgan, the daily dual stochastic sell divergence.
Yeah, that got hit today. The banks did get hit. Tried to break out here.
That was beautiful. No brainer, right?
Yeah. They took out the highs. It crossed back down. It definitely looks like there's some selling.
Failing to go higher in those stochastics just would not budge.
Yep. Oh, yeah, and look at that on the 60-minute time frame yesterday, too. That was the key.
See the other ones in the sector.
That was a 60-minute set up, too. Well, you know what? Tomorrow we have some earnings coming out. Maybe we have an opportunity to take
MTB, same setup.
Yeah, but we'll focus on some of these earnings tomorrow, the next couple of days, and we'll concentrate on that 60-minute divergence.
Capital One as well.
Yeah, all of them. They all got hammered.
And the Goldman Sachs as well. And XLF, as a matter of fact, the ETF for it.
All right.
All right, I beat that horse. Sorry.
Now that's XLF. Look at that. See hourly, little pop at the end of the day there. There it is.
Yeah, I was looking at the dailies.
Yeah. No, I just had it up on the 60. All right, so that's going to wrap it up for this video. And, there's a lot of stuff in here. The important stuff is the patience, the discipline, and also having all these setups delivered to your doorstep. That's the benefits of Day Trading Radio and being part of the community. So come on by, check it out. If you're interested in trading, this is truly a path that you should explore. I've never pushed people onto not exploring their own and finding their own ways, but I've been doing this for over 20 years now, and kind of, you kind of discard what's not useful, and you tend to work on what is. And proof is in the pudding, and proof is in these charts live every day. When you see me mark these levels off real time, yeah, there will be on occasion a breakdown, but the majority of the time, and again, the odds are in your favor that you're close to a tradable zone. The other pieces of puzzle we all work on: the discipline, the patience, the money management. But this is the first part of the puzzle here: is where do you want to trade, and what direction do you want to go? And this is what we do. So, hope you got something from this video, and we'll see you at daytradingradio.com.